Hi, I'm Robert Maltbie. This is Maltbie's Minute on the Market. Hope you're doing well and you're buckled up for what could be a hectic October. What will be the October surprise? Well, we have some potential sources and some black swans circling. Of course, if we identify the swan, we'll know what it is, and it wouldn't be a black swan. But some issues out there emerging, especially today, is on the top of the agenda. The Iranians lobbed in about 100 ballistic missiles. Those are 200 into Israel. Israel's on the ground, and so that looks to be heating up. The longshoremen went on strike, basically cutting off up to half of the goods coming in on the East Coast. That could be a little bit of an issue, and of course we have the upcoming election. So a lot to cover there. Let's jump right in. Our market indicators, our macro market is bullish. It's led by the technicals, liquidity, and the EPS momentum indicators. Technicals, virtually every major domestic index is positive above the 200-day, doing fine. In many cases making new highs. Liquidity also, with cash flows coming in the market. Everyone's talking about this 6.2 trillion in cash and equivalents in money markets. Yes, also that money is finding its way in the market, evidenced by inflows and mergers and acquisitions led by NVIDIA's massive $50 billion buyback. So bullish sentiment there. Earnings momentum, really the key to all this, and the strongest peg in this triumvirate at 3. It is increasing. Analysts are taking their estimates higher. Companies are beating those estimates by a better margin than the norm. And just to show you the order of magnitude, the magnitude of the earnings increases for this year, they've increased from June from 6% to 9% and now 13% for 2024. The estimate for next year also up to 15% now. So that's where we have it with the market. You've got valuations based on the last year in traditional metrics looking a bit rich and stretched. S&P trading maybe 25 times the last 12 months earnings, but looking at the growth projected, driven largely by AI and investments in technology, we're looking at a market that's trading 30% to the norm, to discount to its norm, especially in various sectors, led by small caps, trading at about a 50% discount to the market. Then even the Magnificent Seven, led by NVIDIA, trading at about 1 times its growth rate. So still looking attractive after a tremendous move, followed by Meta and Amazon and Google as the top 4 of the Magnificent Seven. Magnificent Seven itself trades at about a 25% discount to the historical norm, and even the labeled 493, what's left, at about a 15% discount to the norm. So we've got valuations. Hopefully one of these potential events won't knock us off the trail to a good earnings and a good economy there. Let's talk a little bit about the election. Usually you think of the main risk there is where one party sweeps the House, the Senate, and the presidential. And we look back, at least for this, this last 20 years since the year 2000 or so, we see that in Bush 00, Obama 08, and Trump 16, that occurred. But if you look at the average of returns in that period, that year roughly following, was positive, about 12%. So a lot of that fear might be allayed, note with that knowledge. Now let's talk about our stock of the month. Stock of the month, Affirm Holdings, a leader in buy now, pay later. Who wouldn't love that this day and age with the way consumption has been? They're a leader in technology, fintech, and trades at about $40 a share. They're a leading fintech company. Their appeal is due to the transparency, flexibility, and their payment solutions, providing very clear terms upfront about what the costs and the rates are, and very flexible payment solutions. Consumers are preferring it over traditional cards and debit cards and credit cards. They avoid hidden fees, and the company's rate structure is attractive. The company itself has proprietary debt risk algorithms that have helped it really reduce charge-offs, and they're well positioned at point of sale all over the internet. Where you buy, there you see them, so they're right there to help. So we see that market. They're a leader in a market that we see them growing 25-30% over the next 5 years annually, CAGR, and we see a tremendous opportunity in this market. The industry experts expect it to double over the next 3 years. So that is AFRM, and our target is 56. So it's got a wide amount of upside here in the next 12 months. So come to our website, singularresearch.com, and sign up for our trial, free trial, and get a taste of some of our research, particularly now, in this time of year. And hopefully things, we avoid those black swans, and the coast is clear, and we have some good upside and good markets. I'm Robert Maltbie. This has been Maltbie's Minute on the Market. Thank you.